Hello, this is Steve Warshaw from RecordPriceBreakout.com, and today I wanted to show you a little trick that I like to use when analyzing market direction in market indices. And what I have here is a monthly chart of the Dow Jones Industrial Averages, and what I wanted to show you is how to use the MACD to filter trade triangle signals from Marketclub. And what you can see is a trade triangle here on May 2nd of '03 at 8,587.72. And immediately following, you see a nice bullish crossover in the MACD right here. Okay, so you have a green trade triangle, you got a bullish crossover on the MACD. That gives you a strong buy indication on the market. Then what you have here is a nice roll up, and you see some sideways trading action right here. Well, if you were to follow these signals exactly, you probably could have profited, but you would have made a lot of small trades. But what you could have done is remain bullish until there was a negative crossover, a clear negative crossover on the MACD. Now, this area in here, the MACD does get very close, but it does not cross over. So essentially what you could have done is taken a ride on the Dow Jones Industrial Average from right here all the way up till you get the next confirmed negative trade triangle along with the bearish MACD crossover, which is right here. Now, if you take a look at these levels, obviously you rode this from here to here. If you take a look at these levels, that's from 85, 87, 72 to this trade triangle came in at 12,724. A nice bullish run. So why am I showing you this today? Well, it has to do with the current market rally that everyone seems to be so excited about. So let's go ahead and scope this in. And what I'm going to do is I'm going to go ahead and take away, no, I'll leave the MACD. What I'm going to go ahead and do is go ahead and add in a volume bar here. Okay? So what I've done is I've added in volume. Now this area right in here is the current market rally. Okay, and it's gone from the bottom at 6,500 and touched up here around 9,500. But the interesting thing to look at here from a technical perspective is, of course, during this market rally, look what's happened with volume. Okay, volume has continued to shed. It's gone down, showing a lack of investor confidence. There's a lack of commitment in the market. And in fact, the biggest bar we have here was last month, was July, was the smallest monthly volume bar out of all of them. So when you combine that with the fact that we still haven't had any kind of a bullish crossover in the MACD, I think you could have ridden some of this up. You could have taken and ridden from 8,300 up until, now 9,300 and done some bullish trading in this market. But at this point, I would believe that this is a fairly weak signal. Even though the trade triangles are showing a plus 100 score, I would say this is a fairly weak signal, and I would wait to go bullish any further from here for this MACD to cross over. If it doesn't cross over, what I would expect to happen is to have a significant correction in the market. And if the correction doesn't hold some critical levels, and I believe one of the biggest levels for it to hold is right here in this 8,500 area. If this doesn't hold, when this market turns over, what I would expect to see is actually a retest of the lows. So let's go ahead and take a look at that. I'm going to change this to a weekly chart, and I'm going to scope this in a bit. And let's go ahead and move the trade triangles out of the way here and grab our Fibonacci tool and take a look at some of the key levels. So we're currently trading at, let's see, 9,300. Let's make this so we can see these levels. Okay, I think it should be able to see this pretty well here. And so what I would expect to see happen, of course, is for the Fibonacci retracements to turn out to be some important levels. So the first one, once we get below that monthly area around 8,500, comes in at 8,274. Let me just draw these in for you with my mouse. It's not easy to do, but 8,274. And then again, around this 50% level. This 50% level at 79.26 is a significant level. If those levels, oops, I transposed that, 79.26, if those levels don't hold, I would fully expect this market to go and retest the lows and hopefully confirm that the market has put in a bottom. We still haven't confirmed that this is the market bottom. We've never retested this area. So hopefully that's what we do. That's my market forecast. I honestly believe this market is in for a correction. The area that I would watch with bated breath, of course, is this 79.26. Watch this level. If that doesn't hold, we're in for a big bear ride. Take care, everybody. This is Steve Warshaw from RecordPriceBreakout.com.